U.S. Federal Reserve policy decision, as you rightly pointed out. Most of us are not expecting the start of monetary easing this time around. But again, the commentary will be keen-eyed. Do you think there will be a hawkish sort of a pivot from Mr. Powell? And if that happens, should we brace for a big correction?
See, overall, if you ask me, you have to be prepared, as I said, for anything and everything in the markets. Because the markets have run up significantly, the structure of the markets remains strong. The stocks also, in terms of the quarterly results, some of the stocks have been performing exceedingly well. But we need to remember that the US economy continues to be, it's just like the sun and all the other I would say nations are planets around that. So they have anything major happening in the US definitely reflects on the global markets. Going by the data, in terms of the inflation data, in terms of the US jobs data, in terms of the GDP, still we did witness some sort of negative there. But overall, most of the data points, the trend clearly shows that rate cut isn't very likely. But at the same time, the statement, I would say markets have also factored in now. That's not going to be in June. Maybe it's going to be in the second half. So markets are really wondering on that part. But yes, at current levels, there could be some shakeout, there could be some volatility, there could be some profit booking. So those things are definitely there. So those who are looking at from a long-term perspective, they need to be, if they're looking at one chunk go, then they should be slightly wait for some decent correction to enter into. Those who are into the SIP mode, for them, quality stocks is always a way to go, but again, on a monthly or a quarter.
What the U.S. Federal Reserve is going to do in its policy decision for the month of May, and from what I understand, Aamar is saying that we will not see a rate cut this time around, and the markets may also see a hawkish pivot from Mr. Powell. But if that happens, don't expect a big crash because that has already been priced in. But Aamar, I'll come back to you and take it to what RBI might do next, because this I mean, if there is no monetary easing in the US, does that delay rate cuts here in India as well? Because we are in this Goldilocks sort of a situation. There is solid growth, inflation is moderating nicely, so RBI could be tempted to cut rates. But then again, cutting rates would further eat away from the spread between the bond yields here in India and in the US, which may again reduce the attractiveness of Indian bonds. They may not want to do that, especially ahead of the inclusion in global bond indices, JP Morgan and Bloomberg later down the road. What's your sense of things? How does RBI navigate this situation?
Yeah, see, we have to understand that no country works in isolation, and also I would say most of the central banks, they would be keeping a very keen eye on crude oil prices, because energy prices are something which they always have to factor in. And the way energy prices have really held firm, we've not seen some sort of correction there. It's more or less consolidation with a positive bias, given what's happening in the Middle East and to a certain extent in Russia and Ukraine. So RBI, and also we are a agriculture dependent economy to a very great extent, so monsoon definitely plays a very important role. So far as it's concerned, expectations are of a normal monsoon, but again, that's I would say still we'll have to watch out for how that plays out. So RBI might take a wait and watch policy, because the way the heat is also there across the country, the heat waves are across the country. So there could be some concerns there with regard to, I would say, the monsoons or other parts and energy prices. So maybe RBI would wait for some further cues to really take a stance.
All right, RBI will take cues on how the monsoon turnout is. I mean, the expectations from IMD as well as Sky Met is that we'll have a normal monsoon this time around. So that will bode well for us, especially for the rural side of things. Rural consumption is something that is still plaguing our markets. On the other side, crude prices, I mean, they have, it seems that they have topped out for now. 91, 92 is where, from where we have retraced, and we are actually around that $87 a barrel mark. So pretty much trading in that range of $87 to $92 a barrel. But still, if they do bounce back and get beyond $92 and perhaps get to 100, that could be a problem for a net importer like India. But speaking on bond yields, Aamar, do you expect the 10-year in the US breaching that 5% mark, which was a 16-year high which we had hit in October of last year? Do you see us getting back there? And if that happens, how will it impact Indian markets apart from the FII outflows, sir?
Yeah, I would say, see, one interesting part is that if you look at all global markets across asset classes, be it equities, be it commodities, to a certain extent, gold and silver definitely being part of that. And equities, be it the Japanese markets, European markets, leave apart the Chinese markets and the US markets, and Indian markets, of course, they've delivered phenomenal returns over the last couple of years. So the investors, the hedge funds, the pension funds, the professional funds, professional fund managers, they've all done exceedingly well. So having said that, there's also some, I would say, on the back of the mind that maybe it's time to be slightly on the cautious approach given the way the US economy is performing. So yeah, in case there is this, the 10-year yield breaches the 5% level, then yeah, we could witness a lot of money flow as well as happening, because a lot of money, what happens is that they move from riskier assets to assets which they perceive to be less risky over a period of time, depending upon where the economy is in the overall economic cycle. So these are certain aspects which fund managers and I would say the smart money would definitely be looking at. And because the money that you at times save is also the money that you earn. So the risk appetite and also the future expectations, those are certain things which would play out. And also the US, I would say US is also heading for their presidential elections later in the second half. So that also would be something which would be very keenly watched by the market participants.
All right, and sir, I mean, from this conversation that we have had today, I mean, it looks like there is a high probability of a black swan event happening. You know, the election results are due on June 4th. Let's not forget the geopolitical risk from South China Sea, Middle East, even Eastern Europe, they still remain elevated. I mean, at a time like this, when the markets are also at record high, by the way, how does one manage their risk? How do they make their portfolio bulletproof? Aamar, your thoughts?
Yeah, I would say, see, we have to understand that we'll have to live with uncertainty and we'll have to live with volatility. So that's the name of the game. The next coming to the point is that, see, from a long-term perspective, these events, if you look at over a 10-year period, 20-year period, 30-year period, you'll find that events have happened, wars have happened, major catastrophes have happened, unexpected events have happened, and despite that, the markets have bounced back. So the ideal way to look at the markets from a long-term perspective is to focus on quality stocks, diversifying across sectors, and then entering in tranches. So if you like XYZ particular stock or a group of stocks, then ideally you should look at accumulating over a period of time. You'll be far better off compared to most of the other market participants.
Right. All right. All right. So from what I understand, have a long-term view, diversify your portfolio, and maybe have expectations that are actually in line with what the broader trend has been for the markets. And as you also rightly pointed out, so time and again we have seen certain catastrophes taking place, but the markets have bounced back each and every time. And regardless of what happens down the year, if we do see a black swan event, the expectation is that in the longer term, I mean, that volatility will eventually be ironed out over time.